Are we just starting?
Say take one.
Okay, take one. Hello, my name is Sheena Carrington. I am the art market editor for MyArtBroker, and today I'm going to be discussing what is happening in the art market right now. So 2022 was an exciting year for the art market for notable reasons. There was, of course, Andy Warhol's record-breaking sale of Shot Sage Blue Marilyn. Then at the end of the year, there was, of course, the Paul G. Allen collection. However, as we exited the art market in 2022, there were a series of macroeconomic events that started to unfold, which we knew would inevitably follow us into 2023. And as a result, we expected the art market to be watched very closely in 2023. And most of the media so far has commented on a market softening, which of course is difficult to ignore, but also important for us to acknowledge. So when looking at the art market figures from a half-yearly analysis, although experiencing a notable degree of softness, the art market has managed to maintain a certain level of resiliency, despite the prevailing economic and political uncertainties that continue to raise concerns on a global scale. Arguably, the biggest concerns came after the New York May marquee sales, although it is important to note that at the coincidental timing and scheduling of these auctions, the United States was grappling with a debt ceiling crisis, which undoubtedly added to any prevailing sense of uncertainty or cautionary spending activity that was perceived. Nevertheless, when we examine the numbers, the auction season thus far has been fairly respectable, although we do acknowledge that the art market is not oblivious to the mounting challenges that have arisen due to high inflation, rising interest rates.
What does this mean for the art market?
So ultimately, lower auction figures across the board and cautionary spending activity signals recalibration of the art market. There has been lots of discussion, especially last year, that the art market perhaps have become overheated with year-on-year increases in total sales since 2020. Also contributing to this idea of oversaturation were the pandemic sales, which generated high spending activity, suggesting that art prices have perhaps reached an unsustainable level. However, despite this recalibration that the art market seems to be experiencing, artwork still is being purchased at significant price points. There is a demand for artworks, all of this suggesting that investors still see the long-term value of investing in art as an asset class. So, will we see these uncertainties persist for the remaining half of the auction year? Most likely, although the art market will need to adapt to these new realities, and that could take some time before those figures become evident. The fluctuations and challenges observed are not really indicative of a market collapse, but rather a necessary course for correction. However, this is not all somber news for the art market as collectors and investors begin to navigate these sort of shifting dynamics that we're seeing. They are also presented with opportunities to acquire artworks at a more reasonable price point. So the slower area of the art market that is most notably being observed is absolutely the higher priced works. The art market experts, ultra-wealthy investors, and largely the media look towards these works for sort of insights and clues into the art market's current standing and trajectory. However, the reality is that higher priced works are inevitably slower to move. However, it's not fair to say that artworks are not being sold. Jean-Michel Basquiat had a remarkable first two quarters, and Gustav Klimt's Lady with a Fan set a European auction record, selling at Sotheby's for 85 million British pounds, which was above its pre-sale high estimate, and this was for a work that was third-party guaranteed. So artworks are being sold. There is a demand for work, although there is a notable hesitancy in general. So, reserves, guarantees, and resales. These are three elements of the art market that are watched very closely year on year, as they are indicative to artworks' performances and usually provide insights into the artwork's value and how well they're going to perform. However, given the global circumstances this year, we did expect these three elements of the art market to alter significantly. Art Tactic, which covers Christie's, Sotheby's, and Phillips sales in their reports, the recently released reports for the May and June auctions reported a cooling in the upper end of the market and also a decline in the number of works that have managed to sell for above the mid-estimate. However, this dip can be understood in the context of reserves. Art market experts and CEOs have commented in the beginning of the auction season that there was a caution in the market. As a result, estimates and prices needed to be adjusted accordingly. So when considering the decline in numbers that we're seeing, this can also be attributed to consigners who are perhaps not wanting to adjust their reserves to new market conditions. The most notable trend seen from the June auctions was absolutely the amount of resale works. MyArtBroker's June auction report covers these individual works in detail and the specific returns that were yielded from them. But overall, the June auctions were fairly successful. There were works being consigned, and these works were yielding profitable returns, proving that it's absolutely a seller's market this year. Considering the ongoing financial crisis that is affecting various wealth categories, including ultra-high net worth individuals, caution decision-making within the art market and concerning spending is evident. These circumstances suggest that the print market may thrive this year, considering that it provides collectors and investors with a more affordable option to acquiring high-quality works. What we also expect to see is a growth in online sales, which will ultimately provide consigners with an alternative avenue for selling works, especially if they are concerned about work selling at or below low estimate.